Markets remain in positive territory on hopes of a swift end to the war. The Nifty holds above 24,200 with broader indices outperforming and the volatility index cooling off sharply. Most major sectors advance, but IT and oil and gas see some pressure. Amphi data shows equity inflows rising in February even as overall inflows moderated due to fewer days in the month. Total industry AUM climbed while SIP flows slowed down slightly. Market participants expect SIP inflows to rebound in March as normal transaction cycles resume. The government has activated emergency gas supply regulation as LNG shipments through the Strait of Hormuz remain disrupted. The government will prioritize household PNG, transport CNG and LPG production, ensuring full supply to these sectors. Shares of Dixon Tech jumped after the government approved its joint venture with HKC Overseas. The new entity will manufacture display modules for smartphones, TVs, laptops and automobiles. Brokerages say the JV could expand margins over the next few years. Shares of Happiest surged 13% after the company raised its FY27 growth outlook to 12.5% from 10%. Management said its AI-first strategy and generative AI services are driving strong demand across BFSI, healthcare, high-tech and manufacturing sectors. The company now expects around 15% growth by FY28. Hello and welcome. We're holding very well above 24,220. In fact, at least at this point in terms of the Nifty 50 index. So we're doing decently well for ourselves. Of course, we clocked a high of 24,303, but we've cooled off around 80 odd points from there. But nonetheless, we're doing decently well, 195 points higher versus yesterday. Global cues did suggest that positive tilt, and that's exactly how the Nifty has played out. Of course, we saw a bit of a cool off to the lows of the day, but we've done fairly well thereafter. In terms of the losers, let me first pick those. Just 10 losers on the Nifty 50 index. Infi, Eternal, TCS, Reliance are 4 of the crucial and key losers within that pack. That's on your screen as well in terms of contributors. In terms of gainers, in fact, we have plenty. Shriram Finance is up 7% in trade, 4% higher on an Interglobe Aviation as fuel prices come off. SBI Life up 3%. Tata Motors PV also jumping 3%. Aisha Motors, M&M, you know, that entire auto basket, which was being the key drag in trade yesterday, well, that's reversing clearly as fuel prices have come off. So really, that's just a couple of trends which are at play this Tuesday afternoon. When you're looking at the broader markets as well, there's been some outperformance there versus the Nifty 50 index, 1.8% higher on the Nifty small cap, the Nifty mid cap up 1.3%. So you're seeing decent traction on both of those. In terms of the Nifty Bank as well, 1.6% higher on the Nifty Bank index. So you're seeing larger volatility on the banking index, evidently so over the last few sessions. 16% lower on the India VIX. It's cooled off to below 20 levels. That's the other piece that we're keeping our eye out on. So that's broadly the way in which markets are taking shape this Tuesday afternoon. In terms of sectors, you've got auto leading the pack along with the Nifty PSU Bank, Fin Nifty, Nifty Bank, all of them doing well for themselves. IT and oil and gas are the only two laggards, the two crucial laggards, in fact, within sectoral indices. You can see that move on the Nifty IT index as well as on the Nifty oil and gas index, clearly negative. But let me go across to Ravinder. He's got all of the stocks that you want to keep out on your radar at this hour.
Well, yes, from the real estate, Puravankara is in focus, where company has entered into a joint development of a 4-acre land parcel in Bangalore with an estimated GDV of rupees approximately 1300 crores. So back of this, stock is up around 6 to 7%. Happiest Mind is buzzing in today's session, where company has announced a revision of its FY27 growth guidance to 12.5% as compared to earlier of 10%, and this reflects the company's confidence that its AI strategy and a broader portfolio of strategic initiatives are generating measurable reasonable traction ahead of the prior expectation, and the company also believes this growth will establish a solid foundation for the financial year 28, where it aspires to achieve a 15% growth. So back of this positive news flow, stock hit an intraday high of approximately 15%, and stock registered biggest intraday gain in approximately 6 years. Arvind Smartface is also in focus on the back of the block deal, where HDFC Capital Affordable Real Estate Fund has sold approximately 1.8% equity stake in the company for 41 crore, and the share were purchased by Pirojsha AD Godrej, who bought around 8.2 lakh shares at an average price of 498. So back of this, Arvind Smartface is also in focus. And lastly, wires and cable stock is under pressure, like Polycab, KI. All the stock were under pressure after copper, which is a major raw material which constitutes 55 to 60% of the raw materials, is up around 1.5%. So back of this, all wires and cables is under pressure.
Okay, thank you so much for that, Rabinda. Those are just some of the big buzzers in trade. Kunal Bothra joining us this afternoon, giving us a sense of how he's viewing markets. Kunal, what do you make of the move? Of course, the move is far more muted versus how the global markets have done. The recoveries from the lows, especially in terms of the moves in global markets, were far more pronounced. But also, the Nifty as well as the Nifty Bank outperformed when in the recent cool-off that global markets saw. So how do you view the move today in particular?
Today's move, Harsh, stands out not just in terms of the point gains for the index, the 600, 700, 800 point gains for the Bank Nifty or 200 thereabouts for the Nifty. It's just that we've been less volatile throughout the day, and we've managed to hold on to that green territory for most part of the day. Yes, the first half an hour, first 1 hour, the markets were a little bit jittery, because that's obvious. You coming out at a point where there's been so much of pessimism, news flow, volatility into the market. So it's bound to be that the first reaction on the upside would be met with a lot of skepticism. But then once the markets established that we are looking for a reasonable bounce back, and the ground is set in terms of the floor for the indices, that's where confidence started to brew in for the indices, and you saw the market breadth opening a little bit more better. You saw the number of stocks, the list of stocks which are trying to recover from the first half an hour, first 1 hour of maybe a gap up and then a profit booking of sorts. So I would believe that that's a very strong signal that we are looking at a potential signs of index stabilizing. Now the best part when we look at in terms of indicators is on the India VIX. So it's not just a drop in the India VIX, which is very exciting, but on the daily charts there is a classic sign of a bearish divergence on the India VIX. So which means over the last 1 week we've seen the India VIX climbing or making a new high, first crossing that 23 level, and then yesterday, day before, we managed to jump up to 24.5 mark. But on both the attempts, the Nifty has actually made a lower, or the RSI has made a lower high for India VIX. So this indicates that we are looking at a point where the India VIX should cool off. I wouldn't be surprised that potentially over the next 1 week, you might see the India VIX coming back to 16.5 to even 17 levels. And if that happens, we could get a booster of another 200 to 500 points on the Nifty.
Okay, a booster of 200 to 500 points on the Nifty right off the bat. If that were to happen, Kunal, would it be the Nifty Bank which leads?
Yeah, it looks like, the good part is that the financial end of the Bank Nifty is making a comeback. We saw PSU banking stocks also looking quite charged up, at least recovering from their initial profit booking wave we've seen over the last, I think, 1-2 weeks. Private sector banking names, there is an element of short covering. Maybe I think if we see the data by the end of the day or in the next 1 or 2 days, we could probably get a much more clear picture that we are looking at a point where the large cap, hugely underperforming private sector banking names, even these stocks can go in for a turnaround of sorts in the near term. So it looks like that the earlier mojo of the markets is making a comeback. The PSU names are also something which is attractive. We were discussing about the pharma stocks in the last couple of days today also, that many of these pharma stocks are seeing a follow-through price action. That's another sector added to the list of sectors which have been starting to look a little bit more better for the market. So when the list of sectors keep on increasing up slowly and gradually, it's generally a very good signal for the markets in the near term.
And what about auto, Kunal? What's the sense there? Because those are some of the big movers within the Nifty pack as well. You're looking at Shriram Finance up 7.5%. Of course, no doubt it's all driven by oil prices and crude, of course. But Tata Motors, PV, Aisha, M&M, some very strong movers there.
Yeah, yeah, absolutely. So I think we initially anticipated that maybe auto could be a event trade because of the ebb off in the crude oil prices. So we saw that initial move of 4% broadly for many of these auto names, Ashok Leyland, Escorts, etc. I would believe that maybe I think we'll just wait for one more day. If we see another leg of another couple of percentage points for many of these auto stocks which have done reasonably well today, then we are looking at a potential trend in the making for the auto stocks. And you have to start to be a little bit more selective over here, because you can't buy the of course the entire basket over here. But the stocks which have been doing very well in the previous cycle or in the previous leg, they are the ones which I think one should be betting on.
Well, we've set the context very, very well. What we'll do is we'll slip into a very short break. On the other side, we'll take Kunal's picks. Try and get your specific stocks which Kunal is betting on. Stay with us. Welcome back, and we were in conversation with Kunal Bothra with regard to how he's viewing markets. He's obviously extremely bullish with regard to the Nifty as well as the Nifty Bank. Kunal, your picks therefore, what would you really bet on?
So there would be two buy calls, of course. The first one is one Bandhan Bank, something which you've been bullish on earlier. Also looks extremely attractive at current juncture. The stock has moved up more than 3 to 4% today, but I think even at current levels of 180 thereabouts, it's a good stock to bet on, given the kind of charts emerging for the stock on the medium to long-term perspective. So would look at 194 as a positional target for the stock price, and stop loss could be kept at closer to 175. The second would be a buy from the defense package, Bharat Dynamics, and preemptive buy because the stock is was trading into a negative territory, more flattish. It's now coming on the verge of a breakout of its potential 50-day moving average, as well as a swing breakout pattern. So preempting both of these patterns for Bharat Dynamics would suggest a buy with a target of 1500, stop loss at 1300.
Okay, all right. So those are the two calls coming in from Kunal, BDL and Bandhan, one from the defense and one from the banking space. Let me go across to Meryl. She's got a second set of stocks that you want to keep on your radar. Some big buzzers, of course, in that first set. Meryl, what do you have in your set?
Yes, coming to you with a list of stocks that we've seen buzzing in trade so far today. Starting up first with the fertilizer sector. Well, yes, they've recovered quite nicely from yesterday's decline after the government has reassured the agri industry that they have enough fertilizer supply to support Kharif season planting. On the back of this, a lot of fertilizer stocks, namely the public sector ones, so the ones such as FACT, Rashtriya Chemicals, National Fertilizers, etc., have recovered quite nicely, seen a big uptick in trade today. Apart from this, we've got Park Medi World in focus today after the company's launched a multi-specialty hospital in Panchkula, Haryana, which is expected to commence operations starting March 29th. They've also received expansion approvals to add 150 new beds to their existing 350 bed capacity in their hospital in in the Mohali's Grishan. Next up on our list is Reddington, after Apple's announced that they will be increasing iPhone production in India, and this is going to improve the product availability as well as supply stability of iPhones in India, and this directly means stronger distribution revenue for Reddington. Next up on our list today is Dixon Tech. The stock has risen quite a bit today after the Ministry of Electronics and Information Technology of India has approved its joint venture with HKC. Now, this is in order to manufacture TKT LCDs as well as advanced display modules, which are going to be used in mobiles, TVs, automotive, as well as industrial displays. Dixon is going to hold 74% of stake in this joint venture, while HKC overseas holds around 26%. So yes, that was my list of stocks that are buzzing in trade so far today. Back to you.
Perfect. Thank you so much for that, Meryl. Let me go across. We're joined by Nilesh Shetty at this hour, portfolio manager at Quantum Advisor. Nilesh, great having you. Let me first start off by what your outlook is with regard to all the uncertainty that's playing out. Do you buy this uncertainty?
Yeah, I mean, we were actually quite bullish till this Middle East war broke out. Now we are a bit more cautious. Now, India, of course, has very deep linkages with the Middle East, including crude, including fertilizers, including remittances. last decade, India has not had to worry about crude oil prices, especially after Mr. Modi came into power the first time. Oil prices have been benign, which has allowed India to slowly sort of grow at its own pace without having to worry about the CAD and its implications on the rupee as well as interest rates and inflation, which may change if this war prolongs. We're already seeing some impact of that on gas supplies to industries. And whatever the low inflation numbers that we are seeing, including low interest rates, that may reverse if that war prolongs and you see a continued impact on oil supply. So that is a big worry for India. But apart from that, excluding that, most of the things were lining up for India, including increase in sort of consumption post the GST cut, low inflation, low interest rates. So there is significant upside in the markets, barring this issue. Once this issue resolves, you will see the markets bounce back.
Okay. And do you expect a prolonged pain? What are your expectations? What are you really penciling in?
Yeah, I think at least the correction in the market is been not much, 3-4% correction, which may not be the case. It may be a bit more longer than what the market thinks. So at least our senses will be a bit more longer than what the market thinks, but how long, I have no idea. I think markets may have some negative surprises as we go forward in terms of geopolitics of this war.
Speaking of it, Nilesh, are you advising your investors, your customers to buy this dip at this point or wait and watch?
No, so before the war broke out, we were actually asking
Correct.
our clients to be overweight India and overweight equities in general. But right now, we ask them to hold back just to see how things settle because of this war. So we've actually gone back to a slightly cautious stand, asking people to wait and watch. And if the things settle, then it's a good time to allocate more to India.
Interesting. Okay. And Nilesh, in terms of a sector tilt, now we've seen some moves, some very choppy moves in certain sectors. What is it that you would buy at this point, if at all there is any?
Yeah, so we continue to have large weights in financials, in private sector banks. We have been adding into IT services. It is one of the sort of lowest valuations. We've seen them probably now matching COVID lows in terms of valuation at 4-5% dividend yield with the kind of cash flow that they generate. We think we are a very good attractive option to add to your portfolios, and we've been adding there in the portfolio.
Okay. And talk to us about what you're absolutely not touching currently. What would you absolutely avoid? Would it be export facing? Would it be more with a Middle East tilt, or would it be something completely different?
So it's primarily valuation driven, but we do not have any allocation to industrials in terms of capital goods in the portfolio. I mean, they were rivaling consumer staple valuations before this correction, but they're still not attractive enough. We've not had any allocation to consumer staples for, I think, last 12 years now. Again, primarily on valuations at 70 times, 80 times earnings. Despite the underperformance of the last 3 years where valuations have corrected, they still look quite expensive to us.
Okay. Nilesh, I know you spoke about IT. Give us a sense on what's driving your thesis with regard to IT.
Yeah, so there is this hype cycle of AI, and there is what is happening on the ground. When we meet a lot of corporations, including consultants on the IT side, the reaction of the market has been quite severe to what is actually unfolding on the ground. In our view, it is unlikely that corporates are going to rip out their existing IT infrastructure and put in an AI-coded software. Enterprises don't work like that. There is a maintenance cycle, there's an upgrade cycle in an AI-coded software. That is just not possible. So our sense is there is a big overreaction in the market because of this hype of AI. I think enterprises, as they start increasing the adoption, it is primarily IT services companies, including Indian IT services companies, that will help them integrate AI into their existing software. And I think there'll be a bigger opportunity. There will be productivity gains which have to be passed on to employers, to enterprises. But I think on the margin, the pool of offering and opportunity will expand and not shrink for Indian IT services companies.
Understood. Nilesh, thanks so much for joining us this afternoon, giving us that perspective. We'll let you go on that note.
Thank you.
Okay, and viewers, what we'll do is we'll sit on a very short break. We'll continue coverage on the other side. Stay with us.
1% higher. That's where the Nifty is currently. The good news is it's been a strong handover from Asia. Hong Kong managed to eke out a good 2.25% sort of gains. Shanghai managed to, in addition to yesterday's rebound from the lows, hold out by about 0.6%. Japan came back strongly with about a 1,500 point move, and the periphery markets as well have managed to hold out in the green. What about the European markets? They as well have started off on a very strong footing. In fact, I would say that we are actually world underperformers along with China, because we're the ones which are seeing a much more muted move as opposed to what some of the Western markets and some of the Asian peers as well have done. It's across the board 2 to 2.5% apiece kind of gains that the European markets are sitting on. Even the pre-market futures right now for the Nasdaq are scaling higher by over 100 points. S&P futures higher by about 0.3, and the Dow futures as well scaling higher in excess of 150 odd points as we speak right now. So buoyant sentiment is what you're seeing across the screen. Right now, of course, it's Shriram, which is in the pole position, 7% higher of a notch up. Dixon is seeing moves of about almost 5.5%. PFC is higher by 5%. Glenmark Pharma is the name which is looking very good. And remember, Pharma has been a strong footing. Yesterday, too, you had names like in Aurobindo Pharma and Sun Pharma hold out. And today it's Glenmark, which is seeing a big move. Along with that, of course, there's Bandhan Bank as well, which is higher by about 4%. But the big jump sectorally today is the sector which was most beaten down yesterday. That's autos, led by, of course, moves like Tata Motors, PV, Eicher, etc. They are the ones which are seeing a very strong rebound. M&M as well higher by over 2%. And then, of course, you know, there are other heavyweights like ICICI Bank higher by 2%. There's Axis Bank as well, which is higher. Kotak is doing its bit. Coal India has jumped back into the green. L&T is seeing a good follow through. SBI is up 1.25%. And even HDFC Bank is holding up 1% in the green as we speak right now. But on the flip side, weakness continues in a Swiggy, 2.5% lower, even though the stock started off with a 1% uptick. Eternal is down about 2%. The sentiment is a little abated because of the LPG shortage that we are seeing in many mega cities. Coforge is down, Polycab is down, and then KEI as well is seeing a 6% off a downtick. But Kunal, I want to talk about both Swiggy as well as Eternal. Of course, the sentimental knee-jerk today is coming in on the back of the LPG shortage. But Eternal has really been a broken down chart, and now it's even sub the 230 level, which was a very, very strong support for the stock.
See, it's a strong support territory for Eternal on the shorter term basis, and I strongly believe that the stock is oversold by a huge margin. I was looking at the indicators for the stock price and spread over the last 1 month, you know, in this recent leg of sell-off for Eternal, where the stock corrected or started to correct from 300 levels towards 220. I think 219 was the low the stock made yesterday. This 80-point correction has brought the indicators towards a multi-week, multi-month low for the stock price, and that, I think, historically has proven to be a very good opportunity for short-term or medium-term traders to try and go for a positional buy. So I would still believe that at current levels of 220, 225, thereabouts, it's a very good entry point for Eternal. Not just from a trading perspective, but I think even from a medium-term play, I would look at least a 250 to 270 plus kind of a target for the stock price, given the way the indicators are poised.
Okay. All right. Now, among everything that's come through all through today, it's the mutual fund flows also, which came through in terms of the numbers, and the flows were strong for the month of February. Equity inflows, in fact, rising to 26,000 crore rupees. SIP flows, however, fell marginally. They came in at around 29,800 crore rupees for the month of February. But Mitali here to break that down for us.
Right, so for the month of February, we saw that SIP inflows, they saw a slight dip coming down to 29,845 crores, a slight dip from the earlier 31,002 crore rupees reported in January, a month-on-month decline of about 3.7%. However, the drop, it is told to be largely technical, as February had fewer days, leading to lower number of SIP processing. Meanwhile, the equity mutual funds, they continue to have healthy investor interest. In this month also, the net equity inflows stood at around 26,000 odd crore rupees, up from 24,000 crore rupees reported in the month of January, indicating sustained participation from the retail investors. On On the overall front, if you see the total mutual fund inflows, they came in at around 94,530 crore rupees compared with 1.56 lakh crore rupees reported in the month of January. Now, despite this moderation, the industry's total assets under management, they continued to rise, reaching 82.03 lakh crores, up from 81.01 lakh crore rupees reported in the month of January. Looking at the category trends, the gold ETFs, they witnessed inflows of just around 5,500 odd crores, which is sharply declined from 24,040 crores reported in the month of January, suggesting some cooling after the strong earlier interest due to the higher prices in the gold. Now, large cap funds, they attracted funds of 2,112 crore rupees, slightly higher than January. Talking about mid-cap and small-cap funds, both the segments, they continue to draw strong investor attraction in the month of February. So overall, while February, it saw some moderation due to the seasonal factors, the underlying, if you see, the steady retail participation in equities, it still remains intact and firm. Back to you.
In fact, let's hear out what exactly did DP Singh, the joint CEO at SBI Mutual Fund, who analyzed this month's AMFI SIP data, had to say about the same.
So again, 31 days when you have 25 days, so I don't think this is a good number. And you will see that this March number will be much higher than the February number, because those 5 days numbers will also come into this. SIP inflows are the saviors, and when we are talking about any category, the most of the money which is being shown as the inflow in a particular category, maybe large cap or mid cap or small cap, maximum money is coming through SIP route only. See, when you look at the numbers which were coming even before the conflict, the numbers are more or less the same, a little less or little more. So that's not because that what I'm telling you is that the majority of the money is coming through SIP route. And the gold ETFs numbers and the overall numbers, what you're talking about, see, the net number doesn't convey the real picture. I don't know how many have been in the gross flows and how many people have booked profits, because there are different set of people who are putting money and there are different set of people who are booking profits.
All right. Right. So that's the view coming in from DP Singh of SBI. But what we'll do is we'll slip into another very short break. We'll continue conversations on the other side. Plenty happening in markets. Stay with us.
In association with SBI, the banker to every Indian truly.
Air India Premium Economy, boarding now.
Okay, big news as part of the cabinet meet outcome. It seems that FDI from China has been cleared, but with riders. And of course, other countries that India shares its land borders with. Let me take it across to my colleague Prakash Priyadarshi and get in more details on what exactly was this outcome all about. Prakash?
Well, that's an important development coming in as the Indian Cabinet meeting has just concluded, and we are learning from our sources that the Cabinet has given its approval under Press Note 3 to allow FDI from bordering countries. That will be very essential for the Chinese investment in India, essentially FDI investment in India. Along with that, this approval has been given with certain rider that will be announced by the government in next few hours. Along with that, some other approvals, some other proposals were also there, which were cleared by the Indian Cabinet, is with regard to extension of Jal Jeevan Mission. Along with that, certain amendments to the IBC Code Bill and the Companies Act have also been cleared by the Indian Cabinet. These are key approvals which have been cleared by the Indian Cabinet in today's meeting. We are expecting formal announcement by the government very soon. Back to you.
Okay, thank you so much for that key update, Prakash, with regard to that meet. But let's in fact switch focus. Let's try and get a perspective from Kunal, especially with regard to metals. Now, I know, Kunal, you spoke about how banks will do fairly well for themselves. I know you're more bullish PSU banks versus private sector banks. But talk to us about the metals pack. We've seen a bit of a cool off there. Interesting to currently play metals, and obviously it's a higher beta as well that you're playing, and therefore the upsides, especially in the short term, could be sharp.
It could be sharp, and I think many of these metal stocks have gone through a very shallow correction in the last 1 week. Metals are considered to be very high beta sector. If you can try and compare, maybe we can compare metal stocks to slightly higher beta than the real estate stocks. And you've seen what has happened to the realty names. Now, metals in that sense, I think has done reasonably well. Even in the last 1 month, broadly for the market correction, metal index I think has corrected from 12,400 or 500 mark towards 11,800 levels. This is an average correction for the metal stocks, and that's where I would believe that trading buyers would probably originate back again into these favored sectors which have gone through a very less degree correction in a very high volatile market. I would believe that sticking to the larger cap names over here from the metal pack could be a good strategy. Tata Steel I think at closer to 190 levels. GSPL today the stock is up 4%. So broadly I think if it comes back to say 1080, 1090 mark, that's also a very good zone where traders could look at a buy. Vedanta has been doing exceptionally well, but I think at current levels 680, 700 could be a good range where traders could look at a buy. So yes, metal stocks are looking attractive, but slightly lower levels, and I think that's where the risk would start to look a little bit more better.
Okay. In the meantime, the one, key particular reason why perhaps today you're seeing some amount of pressure on both Swiggy as well as Eternal is because restaurants across even Tamil Nadu are now bracing for disruption as the Chennai Hotels Association is warned of a severe LPG shortage. Jude Sanith, my colleague, caught up with the president, M. Ravi, who says that nearly 10,000 restaurants may suspend operations, calling the impact comparable to the COVID-19 second wave.
LPG gas cylinder without supply we are under, so is very tough. Today we are very struggle. We'll feel like the Corona second waves. So Corona second waves also food is there, but today is no food. So people are very struggle, and tourist people also very struggle. So we want to at least 50% can give these cylinders. That's only we can run the show.
Okay, so what is the situation on the ground? I think you mentioned to me that a number of restaurants are being shut as early as tonight itself, will suspend operations. Could you give us some numbers? How much has the impact been felt in Chennai?
More than 10,000 outlets in Tamil Nadu going to shut down today night. So no gas, without gas, how can we do the business?
Okay. And I know you've written to both centre and state with regard to, bringing some sort of relief. What has the government told you? Have they assured you of any relief in any manner whatsoever?
Yeah, we already discussed with the CM, state CM, and we already informed to central government also. They are not supporting anything for us.
Okay. So that's playing out. Of course, we had Prakash break that news with regard to all that's happening with regard to the cabinet and all decisions taken there. What we'll do is we'll slip into a short break. We'll come back with more. Stay with us.
In association with SBI, the banker to every Indian truly.
Back with closing trades, right here on 18 hour. We're holding ground 1.25% higher as we speak right now. 255 points up in the green, 24,003. 50 plus levels is where we're currently sitting at. Shriram has added some more weight, 7% higher for that stock. Tata Motors PV is looking good. Because of the reversal in crude prices, you're seeing the crude sensitives like an Interglobe Aviation as well rebound by about 3.5%, much unlike yesterday when they were getting thrashed out. And the entire auto pack is looking charged up as well. So Eicher is higher, M&M is higher. And then, yes, Asian Paints as well is seeing some rebound by about almost 3% or so. Some of the cement plays, Ultratech Cement, heavyweights like ICICI Bank as well looking good along with HDFC Bank. And then, of course, DRL as well as Smart and Glenmark continues to hold on to its gains. But the centre has issued an order that updates norms for piston rings. Now, remember, this is a very key component to ICE engines to try and help reduce carbon emissions, which is replacing standards that had been in place since 1977. Now, the new standards come into effect on 10th of February. My colleague Shrishti is here with more details.
Well, yes, that's big because India has actually updated the piston ring standards for the first time in 48 years. And yes, of course, there are reasons that why these standards have been changed right now and which are the companies that are going to be impacted. We'll discuss all of that. But to tell you that these norms were issued by BIS and they replaced the existing standards since 1977, and the updated standards came into effect this year itself. Now, why the change? This is to reduce the vehicle emission and improve the fuel efficiency to align with the international standards, global benchmarks. And do remember that, yes, of course, it is the CAFE 3 norms that are expected to kick in just a couple of years, and because of that, it's the whole lot of preparation that is going on. So what exactly has changed? Let's understand that. So the new framework revises multiple specifications for piston rings used in the internal combustion engine. Now the updated changes include updated material standards, tighter dimensional tolerances, new testing procedures, as well as transition timeline. Now with this particular regulation, one of the key beneficiaries is actually going to be Shriram Piston, one of the largest piston ring manufacturers in India. Along with that, it's already a supplier to all the key listed OEMs, and when these new regulations kick in, then of course with the new standards it is even better for Shriram Piston, and that's why the stock is excited in trade today.
Okay, that's some big news impacting some of these stocks. But let me welcome on board Sandeep Agarwal as well from Sowilo and talk about what he's making of the market right now. Sandeep, hi, afternoon. Some amount of respite. Can't say that one is out of the woods, but what is your own sense on whether we've declined enough to start, adding to positions perhaps across the board?
Yeah, hi, good afternoon, and thanks for having me on the show. So yes, as you rightly said, there is a lot of volatility still, and we cannot say that, things are settled. But definitely, valuation comfort is much, much higher, and RBI is consistently pushing in some liquidity. Also, X of crude, we don't see could be a very big jump in inflation numbers. So I think, this is the right time for long-term investor to start looking at market, and valuation comfort is very high. Also, it is much better than earlier in mid cap and small caps also. And across sectors, I think barring one or two sectors, most of the sectors have also come down to a very, very reasonable range. So I would say, yeah, it is time to start buying. And, obviously, you cannot call out global events, what can unfold. But other than that, things look good on the local front.
Right. Okay. So, Sandeep, I guess the next question is, what's looking attractive after the recent bout of decline in the market?
So now we are very constructive on one sector which we were not at all investing for last 14-15 months is IT. I am looking very positively after a very long time on the tech side. I think most of the stocks have come down into very reasonable range, excluding the ER&D place. So this one sector looks very, very attractive right now. Other than that, obviously the private sector banks are continue to look good. And the manufacturing, I think last 1.5 year manufacturing was very slow. Now we are seeing green shoots of those picking up. So the whole space, right from cable, wires, transformers, which also are ecosystem play for the AI thing. Other than that, the core capex companies, industrial goods, all those things are also looking very good. So we are very, very positively looking at, cap goods once again after a long pause, some of the other manufacturing names. And along with that, obviously the tech platforms, which remains our favorite, and now incrementally software services and private banks. So this is the way we are looking at. We are still in a little avoid mode on the OMC side and the oil and gas side, and also on the FMCG side. But we are constructive on rest of the sectors because everywhere there is a meaningful correction. Yes, we are also not looking at auto right now because we believe that a lot of money has been made in auto. So we will be a little more cautious from here on the auto space also.
Sandeep, I almost was hearing you in disbelief. Is that really a call change on IT? Because you've been bearish for quite some time. And again, the question is it just a tactical move or rather tactical call because the sector is so oversold? Or do you fundamentally believe things are changing?
No, so, I never had a view, and I always believe that our business is very sticky. We are software factory of the world. So I don't have any doubt on the business model and all. Only thing was that this time the business model has got hit on the effort side because of AI. 20-25% decline in efforts was to happen. Since contracts are for 5 years, every year 3-4% of deflation is there. So you have to grow at 8-9% to post a 5% growth also. And now with rupee at 92, you get 3-4% benefit on the pad because of currency. So 8-9% profit growth and 15-16 times large cap. I think it is a very comfortable thing to do because of good corporate governance, good board, and good visibility. But I was uncomfortable earlier because the peg ratios, the currency was also at 86, 87, and the growth was almost looking like zero. So then, at that price at 0%, growth in profitability, you can't give a 25, 28 multiple. So peg ratio was looking very insanely high. Now peg ratios are looking very comfortable. Although still we are not comfortable in the names in ER&D because there the peg ratios are still 4 times, 3.5 times, which we are not comfortable. We are comfortable up to 1.8, 1.9 time peg ratio, which is there in the few of the large cap IT names and some of the good quality, big size IT services firms in the mid cap space and some of the small cap names. But we are still finding the ER&D space to be very, very expensive.
Okay, very interesting analysis there on IT. But the banking pack is under pressure, or rather has continued to be so, with the Nifty Bank logging its second biggest intraday fall as of yesterday. There have been concerns, of course, about over-leveraging in the MFI space and sluggish NIMs, which are adding to the caution. The big question, of course, is whether this is a warning sign for the sector or a buying opportunity for investors. He is here with some analysis.
Well, yes, so the Nifty Bank sector has been in focus ever since the markets have taken a tumble on the back of everything that's happening geopolitically. But if you've noticed carefully, the quantum of the fall or the volatility that we're seeing in the Nifty Bank index has on most days been higher than the fall that we're seeing in Nifty. So yes, while the market sentiment is negative, has been so far other than today and has been getting to this entire basket of stocks, there are some fundamental reasons within the banking space itself that is leading to this fall. So what is the fall? First, let's understand that Nifty Bank has reported its second biggest fall since COVID days all the way back in 2020. In the last 1 week, the index is lower by about 5%. Last 1 month, a 7.5% cut. On a year-to-date basis itself, the index is lower by 6.25%. So let's understand what are some fundamental factors that are ailing the sector. First, there is over-leveraging. That remains a structural risk in the microfinance sector due to multiple lenders financing the same borrower. This is a risk that is ailing the sector, one of them. Second one is high borrower leverage is weakening repayment behavior, and this increases credit stress in the system. So this is also yet another negative. And also the measures to curb multiple lending aim to maintain credit discipline and improve long-term asset quality across the microfinance institutions ecosystem. So unless this happens, some of this stress is expected to stay. Let's understand what the stock returns has been on an individual basis of some of these constituents. From the private banks, Kotak Mahindra Bank has seen a cut of about 6.5%, but the big loser has been ICICI Bank, about a 7.25% cut over there. From the PSUs in the last 1 week, you've seen some big cuts coming in on SBI, Bank of Baroda, Union Bank. Bank of Maharashtra took quite a cut yesterday as well, so that was something to watch out for on a 1 month basis also. About a 10% cut coming in on both HDFC Bank and Kotak Mahindra Bank, some of the top contributors to the Nifty and the Nifty Banking Index. If you take a look at what the valuations look like on a price to book basis, Kotak Mahindra Bank currently trades at 2.3 times. The 5-year average is 3.4 times. What I'm trying to say from this graphic is, if you take a look at the price to book of these companies right now compared to their 5-year averages, all of them are trading lower than the average, and this is the indication of the stress that lies in the sector. And these are all the names that we've been tracking: Axis, ICICI, HDFC Bank, IndusInd, and State Bank of India. The biggest variation, in fact, coming in on Kotak Mahindra Bank, 3.4 times is the 5-year average. It's trading at 2.3 times right now. So that's the reason, on some of the reasons why the banking space has not been doing well, and the kind of impact that we've been seeing on some of these stocks, both from the private and PSU baskets.
Okay, thank you so much for that, Snehi. Now, quickly, we also spoke with Digant Haria, co-founder GreenEdge Wealth, and he sees the top private sector banks growing in the 12 to 25% kind of mark over the next 18 months. That's kind of returns he's penciling in. Let me make that clear. He also sees top companies within microfinance and small finance banks rather should do better, and there should be some outperformance there. Listen to his views.
Kotak, ICICI, HDFC, all of these banks look ripe for, 15, 20, 25% kind of rallies over next, 18 months kind of a thing. So, a regional bank, something like, say, a Tamil Nadu Mercantile Bank or a DCB or even South Indian Bank, a lot of these banks will deliver good numbers, good ROEs. So I think they can outperform the general banking sector. So microfinance / micro lending as a space should do well. There are a lot of small finance banks, a lot of microfinance companies there. The top names typically should do very well there.
Okay, that's that on banks. But let me also welcome on board Nagaraj Shetty and find out what he's observing on the charts right now. Nagaraj, hi, afternoon. Good to have you on the show. What is this rebound of 250 points telling you? And does it look sustainable to begin with?
Hi, good afternoon. Market is showing much awaited bounce back from the lower levels. I think seems to have formed a short-term bottom reversal around 23,700 levels. But interestingly, if you look at the chart over the last 1 month price action, what we can observe is the lower tops and bottoms. And even after 2 to 3 days of bounce back, market eventually turned down so far from the lower highs. And most of the opening downside gaps are remains unfilled and partially filled. Some of them have filled, but eventually market has turned down after the filling the gap. So these are all indicating that we are not still out of woods. I think there is a higher possibility that 24,400, 500 is going to be a strong resistance for the market. And there is a higher possibility that I'm expecting Nifty to come down again from near the resistance. So I think this is going to be a sell on rise opportunity.
Right. And within banks then, Nagaraj, is it looking like it's going to be a sustainable move? And then again, how do you approach PSBs versus private banks?
I don't think Bank Nifty itself has bottomed out and big up move is likely. I don't think so at this point of time. We need more confirmation on the bottom reversal. I think this is just a bounce back of a downtrend, and around 57,600, 700 levels, the whole host of resistance could come in around 200 EMA, previous swing highs, swing lows as per change in polarity. So many resistance is placed around 57,600, 700 levels. I think from there, Bank Nifty could turn around, could come down from the higher levels by showing a sell on rise opportunity at this point of time.
Okay. And so a sell on rise is what you're building in, especially on the Bank Nifty. Would you be more constructive PSUs, Nagaraj, versus private sector? Is there a tilt that you have there?
Yeah, I think PSU Bank is looking positive compared to the private banks. We have seen some good strength in the PSU banking charts recently, especially Canara Bank, Union Bank, State Bank of India. They have constructed very well from the lower levels. They have seen some good momentum on the upper side. So I think compared to private banks, I'm betting more on the PSU banking stocks. Whenever the Bank Nifty recovers, shows some significant upmost from the lower levels or forms some bottom reversal, I think the PSU banking sector is the one could lead the index in the near future.
Sandeep, do you have a preference, a tilt, whether private sector, PSU banks at this juncture? What's the view?
No, I think that, the PSU banks are posting very good numbers and there is a good runway from here also. But, given the way valuations have gone up a little bit for PSU and the way it has come back for private banks, as you also showed in the table, I think now, there is the incremental reward for only being in PSU bank is receding. So we are also looking at private banks now. I think all these private banks are come to very good valuation. And from here, good return should be expected in them as well.
Okay, interesting. I'll switch focus to the fertilizer space, and some of those stocks seeing some rebound after the government assured farmers that inventory remains adequate for the upcoming Kharif season. Meryl here with the details on that one.
Well, yes, the fertilizer segment has recovered quite well from yesterday's tremendous decline after the Fertilizer Association of India has said that supplies of urea as well as phosphatic fertilizers will remain sufficient in order to meet the agricultural demand for the next Kharif sowing cycle. Well, actually, official data as of March 6th also suggests that total fertilizer reserve stands at 177 lakh tons, which is around 36% higher on a year-on-year basis. Government is also rolling out an optimization plan in order to ensure that essential sectors such as agriculture are not impacted by the LNG crunch from the West Asia turmoil. This includes a scheduled maintenance at fertilizer plants where demand is currently low, so that the production capacity is fully available when the Kharif demand starts to pick up. In order to address concerns around gas supply, India is also diversifying their LNG sourcing, with around 60% of LNG already coming in from outside of West Asia, with countries like Australia and Canada now being explored for additional supply. Now, following these reassurances, we've seen fertilizer stocks that had fallen in trade yesterday around 2 to 6% lower have now picked up quite a lot, especially in the private sector fertilizer space. We've got FACT leading the pack, and also Rashtriya Chemicals, National Fertilizers, Gujarat State Fertilizers, Chambal Fertilizers, and many others following up around 2 to the range of 12% in today's trade.
Right, that's the fertilizer pack, and it's holding out quite smartly in trade. In fact, Kunal, any trade that you're spotting, given how big the move is in the entire fertilizer pack?
Yeah, I think there are a few names. So, example, RCF is something which has moved up 17-18%. Of course, to give a buy at current levels is not something which I would do at current zone. But I think the chart setups for these stocks are looking a lot more better, because over the last 1.5 years, these stocks have been consistently falling, and falling by a margin of 10-15% in a matter of weeks, or sometimes in a matter of couple of months. So at least this rise for the stock prices arrests the kind of sell-off which these stocks have shown. Chambal Fertilizer I think is the other name. The stock has seen a huge sell-off. I remember, I think 2024, the stock was around the 650-700 plus kind of a zone, and it's moved sub the 400 levels. Very recently, it's managed to make a comeback about the 400 mark. So that's another name to look out for. So I believe that there are many of the interesting names which are looking better. The beta of the sector is a little bit more on the higher side. So I think if I have to pick and choose, I would probably go with Coromandel as well as RCF from the pack.
Okay, Coromandel, RCF, given that some of the other names have already spurt up quite a fair bit. But in an exclusive chat with ET Now, my colleague Ankur Mishra caught up with Moody's and ICRA to try and understand about the health of the financial sector and, of course, growth targets for the same as well. Here are an excerpt.
For the NBFC sector, the conventional asset segments like the home loans and the vehicle, these two segments together account for almost 44-45% of the overall book. They will grow at a stable pace of about 14-15%. The driver will not be one segment, unlike what we saw this year and maybe the previous year. It will be all segments will operate in a very, very narrow range in terms of growth over the next financial year. Most of them will be in the, if I have to put it a broader range, it will be somewhere close to about 15-20%. The larger asset segments will operate in the 15% range. Segments like LAP will grow possibly at a higher rate, about 20-odd%. But the other key segments will all grow in that 14-15% range, which will result in a broader, average of about 17-18%. The unsecured segment, which saw very strong growth coming out of COVID. It has moderated from those levels of what we saw, maybe a 40% growth in the consumer finance and personal loan, etc. In 2023-2024, it has come down to 24%. It's in the current financial year. We would see that also to grow at close to about 18-20%. So if I have to categorize these broad asset segments, the secured, conventional asset segments will be growing at about 14-15-16%. LAP, personal loans, these are the segments which will grow at about 18-20%. So the broader weighted average number would be somewhere close to about 17% for the next financial year.
Right. Mr. Pandey, you expect low to mid-teen growth for banking loans in FY 26-27. Where do you see it will come from? It will be more of a retail credit, or you think that there is going to be corporate capex revival next year?
So we continue to expect higher credit growth in the retail segments and SME, and followed by the corporate. We do think that the capex is running at a healthy clip in India, and that's why the GDP is growing at a certain level. But we don't see any divergent in terms of a rise in capex from these levels. And we should also notice that the avenues that the corporates have to finance their capex have changed in India. A lot of them are financing through their internal accruals, bond market, equity markets, and external borrowings as well.
And just to kind of quickly switch focus, Dixon Tech, oh my God, the move there has been extremely solid. You're seeing a 11.5% move on that one now after the Ministry of Electronics and Information Technology approved the joint venture between Dixon Tech and HKC Overseas, which will be operated through Dixon's subsidiary, which is Dixon Display Technologies. Srishti here with more details on that one.
Well, yes, the final approval is through with respect to the JV with HKC Overseas of Dixon Technologies, and this was announced back in June 2024, wherein Dixon Tech was supposed to have almost 74% stake in the combined entity, while HKC Overseas, which is a Chinese company, will be holding 26% of the stake. And back then also there was so much of analysis with respect to how this will help Dixon Tech to actually go ahead and have these LCD modules at play. This will help them to have a better backward integration and also help their margins to expand, because the LCD modules will not just have an applicability or application with respect to the mobile phones, but along with that other sectors will also be a key beneficiary, or Dixon Tech can supply to other sectors and companies as well. And HKC being a global company, they also have a very strong clientele. Nomura has actually come out with a note as well, wherein they maintain a buy rating on Dixon Tech with a target price of 14,678 rupees a piece, where they say that the approval gives clarity on the JV ramp up. The plans are trial likely to start in the second quarter of FY27, and ramp up is expected in the second half of the same fiscal. The company has already announced their 12,000 crores of investment plan, and add to that, this could add 50 basis points of margins by FY28, because this will lead to a backward integration. So that's the take coming in on Dixon Tech, and the stock is also excited in trade.
Okay, there's that on Dixon, and of course the stock is holding out very well. Sandeep, curious to know, what is it that you're liking within EMS players now?
So we still think that the EMS space is little expensive. We are not looking at any stock within the EMS space. We will wait for some correction, because we believe that the valuation which are there, they don't take into account any kind of, they're priced to perfection, and they don't account for any kind of miss. And when that happens, then the falls are very sharp. So, they have come down meaningfully, like Dixon, PGL, they have come down meaningfully. But still, we will wait for them to be more comfortable range of valuation, which prices in some kind of uncertainty also.
Okay, interesting. What about some of the wires and cables stocks, Sandeep? Do you have a view there?
Positive. So because we want to play the whole ancillary chain of the power sector. So wire and cable and transformers space, we like the space, but we are not looking at the large names because they are super expensive. We are more keen on this very small names, unknown kind of names, where the growth could be better and the multiples are very, very low. So we are more keen on the small and mid cap space in the wire and cable space.
Okay. Nagaraj, do you have a view? Polycab, KEI, the kind of moves that we've seen, they've taken knocks in trade, huge ones, 6% odd. Opportunity, you reckon?
I don't think so. Initially, after the long time, they have started, in fact, Polycab has started declining from the higher levels. I think some more weakness is likely towards 7,400, 7,350. And after that, there is a higher possibility of a bounce back from the lower levels.
Okay, just marking some of the other movers today. And of course, while Polycab has fallen about 6.25%. Today, it's the technology names which are also taking a little bit of a breather. Look at a Coforge, which is down 2.5%, Infosys, TCS as well, which are lower. And then Reliance, after, taking the Nifty all the way up to 24,000. Today, it's quietened down and is down about 1% as we speak right now. Unilever, ONGC, Adani Ports, and Pharma are some of the other names which are also sort of ebbing off. Sandeep, there is heightened activity or excitement around the pharma universe, especially because of the GLP-1 generics hitting the market month end. What is it that you're liking within pharma, if at all?
So in pharma, we have changed our choice again from CDMO to now generic pharma and the big pharma names, because there is a lot of value there. So the large pharma names in the generic branded space are the ones which we prefer. We are not going into the branded space, the CDMO space, because CDMO I think is very expensive right now. So we have changed our targets into the generic branded pharma space, and we believe that there is a lot of value in that space if we take a 2 to 3 year call.
Okay, all right. Kunal, anything within pharma that looks interesting? I know you spoke today morning that pharma has been their outperformer and could continue to do so. Any preferences within that pack?
So yeah, I think Sun Pharma starts to look attractive at current juncture. The stock, I think at 1820 levels, I think something which I would probably peg for a big breakout, and by that I mean potential for the stock to try and even scale past about the life highs previously made. I think just about that 2000 odd levels for Sun Pharma and beyond that. So I believe that that's a stock which is due for a turnaround of sorts. Lupin is the one which has been doing fairly well. That continues to look attractive. Dr. Reddy from the pharma pack has started to show signs of a breakout just around the 1300 levels. From the emerging slight high beta stocks in the pharma pack, I think Aurobindo Pharma has been doing very well for itself. It's come out of a massive rounding bottom formation on the weekly charts and spread over the last, I think, 6 or 8 weeks for the stock price. So that looks attractive for potentially another 100 points to 150 points on the upside over the near term. So the option gets a lot more better from the pharma sectors. You can choose the kind of beta which suits your risk appetite, and I believe that there are opportunities available from this pack.
Okay, that's the take coming in on pharma and what Kunal is finding interesting there. Autos, of course, as the trend is seeing a big move today. Some of the private banks are holding out well. And then, of course, there is that entire PSC trade, which is also looking good. Sandeep, X of banks within PSUs, what is it that you're liking at this level?
No, so PSU banks, we like almost the large names a lot because they have been delivering consistently good names. But we are not liking so much of the power finances and others. We are more keen on the pure banks, and they are also the large names because we believe that the numbers will continue to be good. The credit cost will remain muted, so that is our preference. But as I said, that from a only PSU bank liking to now we are more also in looking at the private sector banks because we believe the valuations have corrected quite meaningfully.
Okay, the private sector banks as well attractive after the recent correction. But Nagraj, what is your own sense? Anything within defense that you're liking or you think it's run up too much?
I think from the defense pack, whole defense sector is placed at the crucial resistance. I'm expecting further upside momentum in defense sector as well as the prominent stocks. If you take Astra Micro, the chartically has been in a constant up move. Currently placed at the consolidation, we have seen a minor down decline in the last session and bounce back today, placed at the edge of a breakout of around 1050 levels. And even Majgaon GRSC also. So I'm betting bullishness on the defense stocks for the near term.
Interesting. Okay. Sandeep, your view with regard to defense?
For defense, we have been abstaining from investing because it doesn't suit our value philosophy of the fund. So we are not looking at any name in defense at these valuations. We believe that the risk returns are not so favorable. Although it is a monopoly kind of sector and the demand is going to go up with the current geopolitical situation and all. But again, we believe that there has to be a valuation justification. We believe that the valuation justification is not there in the space.
And Nagaraj, if I can come back to you with regard to auto, some of the auto counters doing very well. I did take Kunal's view earlier, but what's the view there? Tata Motors PV up 4%, Eicher up nearly 4%, M&M, even the likes of a Maruti doing very well for itself, 2.5+% higher. How is this entire pack looking?
Yeah, they have declined sharply. Auto sector has declined sharply recently during recent correction. And this is just a bounce back. I'm not expecting any bigger turnaround story from here onwards, especially in chartically. And I'm expecting this just a bounce back, and I'm not expecting a bigger up move from here onwards. We could see some selling pressure in automobile sectors from the high levels.
Okay, 4.5 minutes left to go before we wind up for the day. And today, of course, fortunately, it's turning out to be a decent day. The recovery or the rebound, of course, is playing out throughout the globe. It's not just us. Look at the Nasdaq futures. They've climbed up almost about 0.5%. S&P futures higher by about 25 points. And now you're scaling higher by over 200 points on the Dow futures as well. Asia, of course, has had a good close. And the European markets as well are building on to their opening gains. The FTSE MIB is now higher by 3%, and Stock 600, the broader markets that is, or the indexes are holding up well. Another 2.5% of an uptick coming in there as well. So across the board, good gains is what you're seeing. For us, of course, we've managed to eke out about 1.25% or so, equating to about an over 200-point move on the index, actually almost touching a 300-point move right now. 24,400 at least is back on the futures. But Nagraj, given today's move, where do you think we're positioned right now going into trade tomorrow?
Yeah, we can create a long position at this point of time because market is remains strong for the day. And overall chart pattern is indicating that I'm not expecting a bigger up move from here onwards. I don't think this has a important trend reversal on the upper side. So there may be some more upside for next 1 or 2 days. I think I'm going to watchful around 24,400, 500 levels to be breakout. If that Nifty sustains above that levels, then one can accept that this is going to be a good reversal on the upper side and more upside would likely. Till then, I'm just going to be a wait and watch with the positive bias.
Interesting. Okay. So that's broadly the play. Curious to know, Sandeep, what's the view with regard to the metals pack?
And again, metal, I think we are now in the late stage of the trade. They have done phenomenally well in last 1 year. And now we don't foresee much return from here. And even if there is return, see, this is a sector which cannot be a big weight in your sector. So we try to play them through quasi plays like pipes and related products. We don't prefer to play directly through the metal because it's too risky and very volatile for the nature of the industry it is, and we avoid generally in our fund direct plays.
Deep, we let you guys go on that note. Let's begin winding up for the day, and good amount of respite is what you've seen on the screens today. Whether it's out of the woods or not, let's see what kind of handover we wake up to tomorrow morning. But for now, we managed to eke out almost a 300-point gain on the Nifty futures alone, closing in above the 24,400 print for the Nifty futures. For the spot Nifty, 24,285 thereabouts. While Eternal, Reliance, Bharti, ONGC, and some of the technology names like an Infosys, TCS did not do a whole lot. But on the flip side, there was definitely the auto sector making up for it. Tata Motors, PV, Eicher, M&M, Maruti, they were all holding out well. Some of the oil-sensitive trades came back, Interglobe Aviation, Asian Paints. And then, of course, banks did well as well, or actually financials. Look at the Shriram, for instance, that perked up about almost 8%. ICICI Bank was higher. Axis did very well. BEL as well was charged up, and some of the metal names like Tata Steel, JSW, etc. as well were holding out quite okay in the session. The broader markets as well held out well. Dixon, Glenmark, PG Electroplast, PFC, these were all names which perked up quite nicely.
Interesting, yes, and some names which on the back of brokerage notes, which also were a buzz, was LG Electronics up 2.25%. After that, analyst day or the roadshow takeaways that came through, and Uno Minda is up a solid 3% as well, along with the auto pack, of course. So that has obviously supported Uno Minda, but nonetheless, an initiating coverage note by Jefferies also supporting this counter. So those were the two other big ones. Outside of that, Dixon Tech was obviously the big stock of the day, 12.5% higher. Hinduja Global was the other one, 9.5% higher. Suven Life with some promoter buying there, 6.5% higher. Paradip Phosphates, Swan Defense were up 5% each. Optimus Infra on the back of that order win. M&M 3.5% higher on the back of yesterday's move. Plus, on top of it, they also came out with February auto sales numbers, and that kept the stock in focus. 3.5% higher was a decent move. Realtel was the other one on the back of news, which also did fairly well for them for itself. Fertilizer stocks were the other ones. You also had the likes of a Polycab and a KEI, which were in focus. So both of those stocks saw a bit of selling on a day like this, 6.5% lower for some of those names as well. But broadly, you saw very, very good market breadth, frankly. You saw a decent move in broader markets as well. The market breadth was extremely strong. So you got good tailwind in that sense. Less than 400 stocks actually in the decline. So nearly 9:1 in terms of the ratio of gainers to losers. Kunal, how do you sum up the day?
Well, I think it's been a brilliant day for the index, much needed after the last, I think, many days of the market volatility and the downtrend. The good part was that throughout the day, the market breadth remained constant. The index remained stable. There was a good amount of call writing at the start, at 24,200, which was acting as a bit of a resistance of sorts for the index. But then that was gobbled up very well by the put writers, and you saw a change of stance happening from the index, and that's why on the expiry day, you saw that additional 50 points, 60 points jump on the index. But again, I think good to see that the financials leading the pack again. Bank Nifty showing at least a 900 to 1,000 point up move. And the best part about the market today was the India VIX falling down by more than 20% approximately. We've fallen below the sub 19 mark from point where yesterday we were almost at 24.5 odd levels. So that's a substantial withdrawal from the India VIX perspective, and that augurs very well for the markets going forward.
Okay, on that note, let's wind it up right here for the day. It's been a good one. Let's only keep our fingers crossed that it sustains the rebound that is, but we'll catch you again with the trading action tomorrow morning.
In association with SBI, the banker to every Indian truly.
Air India Premium Economy, boarding now.
I don't walk, I cruise. I don't sit, I lounge.